Welcome to The Top Out, the show where we talk with entrepreneurs and investors about how they got started, the companies they run, and how they see the future. Brought to you by Redpoint Solutions. Today's episode is with Regan Bozman, the founder of Lattice Capital, an early-stage crypto and Web3 fund based in San Francisco. Hey, Regan, thanks for jumping on with me.
Yeah, thanks for having me on.
Yeah, it's good to see you. So I'm wondering if we could start, if you wouldn't mind just giving a quick background of what you were working on before you got into crypto and kind of what led you into that space.
Yeah, absolutely. So my journey into this kind of starts about 6.5 years ago. I moved out to San Francisco to take a job in the deal team at AngelList. If people aren't familiar, they've sort of built this like marketplace of capital going into early stage startups, and the deal team kind of just like makes sure that that marketplace runs efficiently and everyone's happy and there are successful outcomes. And so I was doing that for a bit over a year, and then we ended up kind of spinning out a similar business like in crypto. There's kind of regulatory reasons as to why like it makes sense to do that business separately than what AngelList does. And so my boss at AngelList, who I was a big fan of, was leaving to start that business, and I basically followed him there. So I knew absolutely nothing about crypto, but really thought it was just like an interesting opportunity to kind of try to build a business in like a pretty new and undefined market. And so, yeah, that was kind of like how I got into it.
Do you remember, like, where did your conviction in crypto first come from? Was there like a particular person or project that kind of sparked it?
Yeah. So I didn't really have much conviction in like anything specific. I think more broadly I did. And so the business we spun out of AngelList was called CoinList, and was sort of basically building infrastructure around capital formation and fundraising for like early stage crypto projects. And I kind of was able to get comfortable with like the risk there, but because basically it felt a bit like a bet on just like something in crypto working.
Mm-hmm.
You know, we were working with a bunch of early stage projects, and I mean, I didn't know it at the time. A lot of them would actually do really well, but I think I probably assumed that like a lot of them would fail. But it felt like you kind of only needed a few of them to work for like CoinList business to make sense. And so it kind of felt like that was a better risk adjusted bet than like joining a specific protocol or like one just early stage team. But I was actually really cynical about crypto for the first probably year and a half I worked in it. Like I started working in it in kind of fall 2017, which is right as like the last bubble was kind of like on the way up.
Mm-hmm.
Probably ended up popping about 6 months later. And so there were just all sorts of like scams and like random projects and people trying to make a quick buck. And it was actually like a really bad, I think, time to start working in it because there was so much noise and nonsense. And so it actually took me about a year and a half after starting to work in it to kind of slowly get comfortable that like, all right, there's something real here.
Is it hard just emotionally to like maintain your conviction and motivation when there's like a collapse? And I mean, it's, you know, Bitcoin isn't the entire crypto market, but when there's a collapse in the price of Bitcoin or when there's like a general bubble bursting.
Yeah, 100%. It's not fun at all. I mean,
Yeah.
I remember, so yeah, I started working in it fall 2017, and you know, it was like cool, right? I mean, some of it was like laughable, right? There's obviously kind of the nonsense, but like I remember being at dinner at Christmas that year at an ex-girlfriend's, and like the family was like, oh, asking about crypto, what coin should I buy? Like, what do you think is interesting? And then, you know, 6 months later, right, I think most people were like, oh, this is a joke. Like, this is totally dead. And that kind of general feeling probably lasted for like 12 to 18 months. So, I mean, there's the like social component, right? Which is like, if all your friends think you're doing something dumb,
Mm-hmm.
that's hard. And then there's also the literal component. Like CoinList had a really bad business during the bear market, which lasted for a long time. And that sucked. Like it's really hard. You know, we were lucky that we had money in the bank and we were able to like make it through, but a lot of companies didn't. So it's definitely like the highs are high in the industry and the lows are definitely low.
Yeah. So you left CoinList to start Lattice Capital, where the firm that you're running now. What was kind of the impetus of wanting to start your own fund? You sort of answered the question already in terms of wanting to like diversify and not put all of your eggs in one basket. But what made you want to start a fund and sort of become a professional investor?
Yeah, so I left CoinList about 6 months before we sort of started ideating on Lattice, and I didn't really know what I wanted to do, but I kind of wanted to work with just like earlier stage companies. I think at some
Yeah.
point, like any crypto company that gets big enough, CoinList included, a lot of the problems you work on just tend to be scaling problems that are not that different than like the ones that a fintech company or something like
Yeah.
that experiences. And so I just kind of wanted to like get back to basics and like explore more weird crypto stuff. And so I spent about 6 months just like consulting with a few projects on like kind of growth and go-to-market strategy, which is sort of what I've been doing at CoinList. And then me and my partner Mike, who I worked at CoinList with, we've been talking about doing something, and I think we just saw that we felt like we had experience that was relevant to early stage teams. We've been doing growth and go-to-market strategy for a lot of like these crypto projects that we worked with at CoinList, and just very few investors had that experience. And in our experience talking with early stage teams, we've written a few small angel checks. Like we just felt like that was valuable experience, and we could kind of have a differentiated product in the market. And so, I think this was something that had always interested me, and was something I wanted to do for a long time. I just didn't really like know what the angle was or how I could kind of make this happen. And so, seeing that gap in the market and feeling like we had something to offer, that was really kind of what like drove the impetus for Lattice. And so it was like last summer we kind of started raising our first fund and just like talking to people about it.
Can you give us just some of the basics on Lattice, like how much you guys raised in this? I think this is your first fund, and sort of like what stage are you investing? What size checks are you writing, like approximately? And if you have kind of like an investment thesis.
Yeah. So our first fund was $20 million. We were writing $250,000 to $500,000 checks out of that. We've closed a second fund and we're investing larger checks in that. The strategy is really like we wanted to build a diversified but somewhat concentrated portfolio of early stage companies in crypto. And so our thesis within that is pretty broad. I think generally we think products that expand the market are going to be some of the biggest winners. And so again, that's like a very vague, thesis. Generally, I think products that make crypto easier to use, that make it more interesting to a larger audience, that just like generally infrastructure that makes things easier. All of that gets us excited. But I think going back to kind of what we were talking about earlier, like how it can be hard to work through these very volatile cycles. One of our main theses at the fund is really that like the biggest opportunities are going to come from founders that are able to sort of stick through multiple cycles. And so, for example, right now, maybe we're entering a crypto winter where like 6, 12, 18, 24 months, the markets just suck and like no one cares about crypto again. We want to back founders that we think are going to work through that and really have the conviction to do that.
Yeah. So first of all, do people use the terms crypto and Web3 just interchangeably at this point, or is there a meaningful distinction?
I think a year ago they were different. Like I would have said Web3 is kind of like a subset of crypto and really refers to just like decentralized software, like general purpose software. I don't know exactly how this rebrand happened, but I think now they are sort of interchangeable and people like to refer to the industry just broadly as Web3.
Do you think that this current downturn or slowdown or bubble bursting, whatever you want to call it, is going to end up being good for the industry as it sort of separates the people that are sort of in it for the hype and in it for a quick buck versus people that really want to build meaningful products? That's sort of one of the, takes that's out there right now, is that this was sort of like similar to the .com bubble where a lot of the tourists kind of went home. Or do you have a different perspective on it?
I think if you want a positive perspective, like that's the way to look at it. And I think it can be, I don't think it's wrong, but I think what the bad part about this downturn, and specifically a lot of the kind of like large collapses that we've seen. So 3 Arrows Capital, which is like a very big crypto hedge fund, imploded. A lot of the centralized lenders, Terra and Luna, which is like a big crypto project, all of these imploded. And really, like it was largely retail investors that got hurt. And so like in and of itself, that's really bad. Like it's messed up that a lot of these sophisticated crypto funds walked away with a lot of money, and people, in many cases probably lost their life savings. Like that sucks and that's bad. And the industry has done a very bad job at policing. And so I think we need to do better at that. But even just taking that, like accepting that, historically what's driven a lot of like interest in crypto is like retail investors getting excited about new projects, driving attention and money into the space. And so if this cycle, a lot of them just like got their shirts taken, like that hurts everyone in the space, right? And it
Yep.
makes people a lot less likely to come in. And so I think for me, like that's not like a 3 month thing. That's like a longer thing to get over. So yeah, look, like a lot of dumb shit got funded. There was a
Yeah.
lot of like just nonsense money put into the space. And so I think a downturn does help clear a lot of that out. But like it also makes it harder to grow any product in the space. And I think just kind of makes everyone's life harder.
Yeah. There's sort of this specific criticism that there's sort of larger funds out there making equity investments in early Web3 companies, receiving tokens, kind of riding up the hype cycle of those tokens, which is partly driven by the fact that they made that investment in the first place, right? Them clearing their position in those tokens, making a bunch of money, just abandoning their equity position, moving on to the next thing, and then retail ends up kind of holding the bag at the end. You basically just laid out this argument, but that does hurt the broader kind of Web3 ecosystem and movement if retail just gets crushed over and over again. Do you think that style of like venture coming into Web3 is going to continue, or do you see that resolving itself?
Yeah, so I mean, I think that criticism is right to some extent. I think there's a lot of funds that have engaged in bad behavior and done exactly what you're describing. But I think really like what's caused that, I think, is a lot of funds that don't really do venture kind of masquerading as venture funds. And so
Okay.
what I mean by that, right? And I'm oversimplifying this a lot, but like generally there are kind of two types of funds in crypto. There's ones that are set up as hedge funds where their mandates are to like move in and out of liquid positions. Their investors can generally kind of take their money out of the fund, let's say on like an annual basis. And generally, like they are just like liquid, more short-term focused vehicles.
Mm-hmm.
Venture funds, like for example, which is what we run, our investors are locked for 10 years. We're not trading in and out of things, and we're happy to, take positions where we're locked for 4 years, and we've done that many times. So I think really the criticism there is mostly against hedge funds that have kind of masqueraded as venture funds, right? They claim to be like long-term helpful investors, and they're just not. That's not what they do. A lot of the burden's also on teams, right? Like if you have whatever your XYZ network and you're launching a token and you don't lock your team up, you don't lock your investors up for like longer than 6 months, like you're also encouraging short-term behavior. And so
Yep.
there's been a lot of kind of fast money moving into maybe not the highest quality projects that like describes what you're doing. But I think on the whole, like that criticism is not universally true. And I think like, to my knowledge, you look at the largest crypto funds, Andreessen Horowitz, Paradigm, I don't think they are like moving in and out of positions rapidly. And I doubt they've sold most of the investments they've made. For example, like, we've deployed, say 90% of our first fund, like we've moved less than 1% of that capital we've deployed. Like we just don't trade. We plan to hold these things for a long time. And so I think that the criticism is true in certain pockets of it, but I don't think it's universally true.
Yeah, well, that's a helpful clarification because I think a lot of people who are just sort of as a part of retail or sort of lay people don't necessarily see a distinction between those different types of vehicles. They just see it all as sort of institutional money and just sort of big money, and don't really draw those distinctions. I want to move on to, you had this great thread on Twitter the other day that I loved that was talking about NFT projects and sort of like people trying to force NFT projects into this venture model, and why that maybe didn't make sense. And that I don't want to summarize it for you, but do you mind kind of walking us through that thought that you had? And yeah, I'd just like to hear you reflect on it a little bit.
Yeah. So, I think there was kind of this really big like NFT boom, probably started like last summer, right? Where you had a big run up in the value of NFTs. If anyone's not familiar with what an NFT is, let's just say it's kind of digital art for like the purposes of this conversation. And especially what was popular were these kind of like limited edition mints where someone would mint a number of like computer generated images that were kind of differentiated on a few attributes. And generally these were collections of like 8 to 10,000. And the two most popular ones, or the two most valuable ones, are generally CryptoPunks and Bored Apes. And these can be a really good business, right? Like I'm
Yeah.
not 100% sure what the lowest price you could buy a Bored Ape for is right now, but it's probably about $100,000, and it was much higher than that a few months ago. And these are really good businesses, right? Like you're kind of just generating art with computers and selling it. Obviously, most collections were not as successful as those, but like nonetheless, it's a good business to be in. Um, we saw a lot of companies, kind of the parent companies behind these NFT collections, raising large venture rounds. So Yuga Labs, which is the parent company of Bored Ape Yacht Club, raised, I want to say, a couple $100 million, I think at a $4.5 billion valuation. And generally, the kind of thesis that VCs use to underwrite these investments is like, all right, this is going to be like a Web3 Disney, right? They have like these characters, all the Bored Apes, and we can like make restaurants and maybe theme parks and like movies and whatever, like using this IP. To me, that like just doesn't make a lot of sense, where I think there's just kind of a number of like contradictions embedded in that. I think one, on the whole, like you look at what's made IP valuable, and it's generally just like staying power, right? Marvel, Disney, Star Wars, all these valuable IP collections have been around for a long time. And like that lore is like very deeply loved by fans. And so to me, to take this kind of like very financialized product with like very limited history, and just say, all right, like we can make this successful IP house because people are paying a lot for these JPEGs, it's kind of silly. I also think there's just like an inherent contradiction where the highest profile projects tend to be these ones where there's a very limited number of them, right? Like, yes, fans can own a Bored Ape, but there's only 10,000, and it's only fans that have $100,000 to buy them that can own it. And so I think like then trying to presume that you can make mass market IP based on something that kind of definitionally very few people can own is kind of silly. But I also will say like a lot of smart investors have put money into these things, and I could definitely be wrong. I think it's just a story that I've struggled to get excited about.
Do you think that the NBA and the UFC will be making a meaningful amount of revenue from NFTs in 5 years?
Yes. I think like the NBA has taken a relatively different approach to this kind of like small number of NFT, high dollar value per one.
Mm-hmm.
And like NBA Top Shot, which is sort of the licensed like NBA NFT collection, I think the average price for a moment, which is what they call it, is like $20, something like that. So I generally think like digital playing cards, that's a story I totally buy. And like, I mean, the NBA, I think, has not executed as well as they could have, but like, it seems very feasible that you have like games and stuff that people can play online based on the NBA moments you own. So I think that will be a big market, and we're still in very early innings of seeing what that's like. But I think there'll be a lot of failures kind of before any of these sports leagues figure out the exact right model.
Good example of the types of things you invest in that you're really excited about that are maybe a little bit easier to understand, or are a good example for people that don't live in Web3 every single day.
Yeah, so I think a good example is like we invested in this company called Gallery, and they basically made like it's like a digital art gallery. So you have some number of like NFTs of digital art you own, and you can just link to like your gallery profile and kind of display like your collection, and you can showcase it based on different categories. You can kind of have different collections, and then kind of there's this social experience where you can just see like what other digital art people have. So I think it's like a pretty, logical thing that if you accept like digital art and NFTs or something meaningful in the future, like this is a pretty natural thing to think that it should exist.
Yeah, that's really cool. I think that some of the art coming out of the Web3 space or coming out as NFT is really incredible. That's probably been the thing that has sort of made me somewhat of a believer more than anything else. Particularly like there's some generative art projects that are, just really beautiful, just like really incredible art. I'd like to have them as prints and put them up on my wall. I think most of them are usually gated where you can't do that unless you own the NFT. But I mean, there's some incredible projects out there.
Yeah, 100%. I think like everything in Web3, just because it's like financialized from day one, of course, it's like the nonsense that sells for like $200,000 that kind of like generates the interest and like the press. But there's really cool digital art, and it's just something that's historically been hard to monetize, and now it's a lot easier. And so I think we're still in like early innings of what's going to come out of that.
Yeah, there's I had this hot take that I'm not fully ready to defend, but it was basically that ICOs were sort of the memification of finance, and then NFTs were sort of the financialization of memes. I don't know if that's just too many words thrown at you, but
I know. I think it's like a reasonable way to describe it.
cool. So I want to I want to go into some sort of rapid fire questions here to wrap things up. So what is your favorite NFT project, just in terms of the creativity or the art behind it, that's come out recently?
Yeah, we have a portfolio company called Rosebud that builds like they kind of build tools to make generative art. So you can actually kind of just like type in attributes or generally things you want to see, and they use AI to like just programmatically generate this. And they made a collection of these digital toads, and I can send you the link, but it's like really beautiful, totally computer generated art, and it's very cool.
Awesome. Who has the best Web3 memes on Twitter?
Um, That's a good question. There's a fund called CMS, and like they have a very good Twitter account and a pretty good meme game.
Is being good at making memes now like important for running a venture fund?
I hope not, because I'm pretty bad at it. I think it's like one of many paths to kind of cultural relevance in crypto, and like some people have succeeded based on that path.
Yeah. Do you think that there's any lessons that the more traditional enterprise software world could learn from Web3, technical or non-technical, but just anything?
I think in general, just like this meme of like user-owned products is going to be pretty meaningful in the future. I don't know exactly how. Like, I think it's still like more academic than it is practical. That like, I think you're starting to see some of those really strong community effects where like people feel ownership in products, and I don't know if there are lessons now, but there definitely will be in the future to be gained from studying this.
Yeah, the sort of community-driven projects and community ownership, I think, is super interesting. I've been really loving people building businesses off of Notion, which I think is really cool, is probably not technically different than any other platform that people can then build businesses on top of, like the App Store or Salesforce in my world. But it's cool to see just individual people kind of contributing to the community and figuring out ways to make money on it.
100%.
And last question for you. How do you stay sane just personally, given all the noise that's going on in Web3 and the markets and just the world in general? Do you stay sane?
I hope so. I mean, yeah, I try to like not, for example, like I used to listen to a bunch of crypto podcasts, and now like I just listen to audiobooks. I'm kind of like, all right, like, I spent enough time on this. I don't know, like I bike and I ski and play golf and just like try to not think about this stuff all the time. But I think it's kind of similar to probably a lot of people who work a lot. It's just like this stuff is it runs 24/7, and it can be hard to turn off from.
Yeah, absolutely. Cool. Well, Regan, I appreciate your time. Really valuable conversation. Everybody check out Regan on Twitter. He's easy to find. Check out Lattice Capital if you're interested in learning more about the Web3 space and following along from, somebody that's not like totally just in the hype.
Yeah, hopefully we're not. Yeah, I really, really appreciate you having me on, Dana.
Cool. Yeah. Talk to you soon. Thank you so much for watching this episode of The Top Out. I really hope you enjoyed it. If you want to see the next episode, please follow our page on LinkedIn or subscribe to our YouTube. We'll see you next time.